Inducement Sweep Entry Module is very important when it comes to smart money concept. This video will teach you exactly how to trade liquidity sweep using inducement, and I will show you my personal approach. Pay attention. So we are going to name this diagram A. So we have this as diagram A, which implies that everything we are going to do here is the first of its kind, is the first example. So this becomes a diagram A. Let's see if we can write that on A. Okay, so we have diagram A, okay, and the other one is diagram B. Now pay attention, these two diagrams are of different value, so you will need to understand them before we go to the chart. So the first thing that we want to identify is the trend, and of course that's where my KDRC stamps comes in. So let's pay attention. So in this scenario, we see price is currently bearish, so we have a break of structure. So once we have identified a break of structure, the next thing is we need to identify our swing highs, our swing point. So in this case, this is a pivot point, this is a pivot point, and we also have this as a pivot point. Of course, this is a break of structure. However, this low is not confirmed yet. This is not a confirmation yet, except we now see an inducement. So this low becomes valid after inducement have been taken. In this case, this is exactly what happened here. However, in this diagram A, what do we see? We can see that this was just a simple sweep. So immediately price sweeps liquidity inducement. In this case, it's sweep. That's when it is when the candle wick through the previous pivot point or swing levels. All right, so that's where we need to pay attention. So immediately that happens, the next available point will have to be this low. So you need to pay attention to this low. Why? Because this low will confirm this inducement. Okay, so after this low have confirmed this inducement, two things you have to check out for. The first is the order flow, secondly is the order block. I know you have been taught fair value gaps and the rest. Fair value gap works. However, understanding order flow the right way will give you a upper hand. In case you want to learn how to trade using the order flow, using my order flow method, check the video description. I already make a video on it extensively. All right, so after this break of structure, the next point is we have to look for our order flow. So if we see the order flow, of course in this case this is our order flow. And where do you take your trade? You take your trade from here, and your stop loss will have to be above here, right? And of course, this is very, very important. You need to pay attention to what I will be teaching you. However, let's assume that this order flow have been mitigated. What then should you do? This is where you will need to engage the order block. All right, you need to engage the order block or the supply and demand zone concept. And in doing this, you have to look into the order flow and any available zone that is there. That's where we can now look for our sales. So in this case, this becomes it, which means that we have to wait for price to target here and continue to the downside. So this is an example of diagram A. First thing, identify the trend, look for a break of structure, confirm the inducement using the wicks. So this one, price wicks through it, then it's a confirmation after we see the wick. So if there is a body close, then we have to wait for another kind of confirmation. So this takes us to diagram B. So diagram B, we are seeing, let's use the bullish scenario for this. However, you can use this whether it's bullish or bearish. So after the break of structure, the next thing you want to look out for is inducement. So these are break of structure and this is our inducement. And as you can see, in this case, there was a full body candle close. So when price closes with the full body, the approach differs. All right, so the first thing you want to do is you want to look to the left. Okay, and one thing you must look out for the left is same thing: order flow, order block, supply and demand zones. Okay, so what you do in this case, if price mitigates it, very, very okay. However, if price did not mitigate our zone, well, we just have to wait for further confirmation, which I will share with you in a while. Okay, so after we have identified a tag in price, which is very, very important. So if for this diagram B is very important, when it happens, when price closes below the inducement leg with the body, then we can start looking for all of that. Okay, so what we need to do next is we identify the highs. In this case, this becomes the zone, right? So anything that happens in between this high and this low, we are not interested. Okay, because price can just deceive you, and you might say, oh, okay, this is the break or this is a sweep, and you want to enter here. No. Why? Because everything that's happening here, it's happening within a range. All right, so this is more like a consolidation. Okay, so even though it's trending inside, it's still a consolidation for us, and this is why you will need to understand this thing extensive. Okay, so after we've identified this, the next thing is we don't trade any of this. We wait for this break, and once price break structure, yeah, and of course this is what we want to do. We want to see price, sorry, let's do this. So after this have happened, let's say we see our break of structure here. Okay, after we've seen our break of structure, we'll not just take our trade here. Okay, if you do, it's going to fail. So we'll simply wait. All right, we'll wait for price to break structure again. In this case, this is it. All right, so what else do? We wait for inducement. So this becomes our inducement. Okay, so if this happens to be a sweep like this, let's say this happens to be a sweep, very accurate. So wait for what? Break of structure, and we can now enter from this. Okay, in case you don't understand this yet, I want you to rewind this video, watch it again over and over again. Even after you watch it to the end, watch it about for about 1 to 2 times, right? You are going to understand it fully. Do you understand exactly what I just did here? So this diagram B is quite complex compared to diagram A. So let's go to the chart, because I don't intend to waste much time. I'm a little bit strong right now. So basically, let's just do this, and of course we'll call it a day. So the first thing that we did here is we have to identify our break of structure. Of course, we have to start from the highest point of the new trend. So in this case, this is a bearish trend, so we could potentially start from this high. All right, so what do we do? We simply have to wait for our break. So this break of structure tells us that, okay, price is willing to continue to the downside. Okay, so we have this and we have this, and of course, we have that, we have this. So after the break of structure, remember in my last video, if you have not watched it, I recommend you check it. I talked about valid pullbacks. You need valid pullbacks to be able to map out this accurately. Meanwhile, in case you are interested in one-on-one session, please do well, check the video description and get to me through Telegram or Instagram. All right, so you have your one-on-one session with me, and I will show you all my secrets, including my trend direction secret, which is the KDRC stamps and other things. Okay, so after the break of structure, that's just by the way, anyway, after the break of structure, we want to see another leg. So this, okay, this was the break, right? So price pushed down. This, if you watch my previous video, you should understand what I'm doing now. This, of course, is a valid pullback. So we have a sweep. So this is not a break, it's a sweep. So in this case, we can look for break of structure and enter from this. So this is an example of the diagram B, which I explained earlier. All right, so this is actually a counter trend trade, and how to do it is quite simple. Okay, the first thing to identify is your swing or your valid pullbacks. So after you've identified your valid pullbacks, so we have this was the highest point of the candle, lowest point of the candle. Price broke it to the downside, and price pushed up, broke it, swept this, right, pushed up. So everything, remember what I said, everything here is all about consolidation. We're not interested in any of those until price takes out this high. In this case, this becomes the high we're expecting that price takes. So immediately this happens, we can now look for a counter trend trade. Why? Simply because of this low. Why is that? It was a simple sweep of liquidity. So this confirms it. And where do we look out for our order flow? Where is our order flow? This is our order flow. Okay, this one have been mitigated, so this is our order right there. So that's exactly what happened, and price pushed up from this point to the upside. Do you understand? So you can target your simple 1 to 2 1 to 3, which I often do. I target 1 to 3. So of course this is 1 minute 1 hour time frame, and I could have gone to the lower time frame, and you will see how we can enter our trades from there. Okay, so that's just one of the examples. However, it doesn't just stop there. As price kept pushing to the downside, we had a break of structure right here. So after this break of structure, what else are we looking out for? We are looking out for our sweep. And where is our sweep in this case? Look at this. Look at this. We have a candle here. We have a candle here. Okay, so this candle took out this high, and this candle took out this low. So automatically this actually becomes a high. So pardon, this becomes a valid high as well. Okay, so this is exactly what we have. Price push down, retraced, push down again, retraced, push down again, and retraced. Do you understand? And what happened? Straight. Now I know most of you will now mark this as, you know, pullbacks. These are not valid pullbacks. These will confuse in the market. So you have to be patient, and you must understand exactly how these things work. This is why I recommend you check the video description and watch the pullback video. Watch the first watch the pullback video, and of course you can watch the major and minor inducement video. Okay, so the next thing that I want to do after we've identified this, okay, let's use this for example. As you can see, this particular one was not taken. This high was not swept. All right, however, this high was what? Was swept. So what do we do in this scenario? It's quite simple. It's quite simple. And what this is diagram B. All right, this is diagram B. Like I said, rewind this video, watch it again in case you don't understand. So after price have, you know, broken the structure to the downside, so after price have taken this, and we wait patiently, because everything between this low and this high, everything between this low and this high is just consolidation. So this is the concept. We're not interested in all of those. So after price have taken this low, what else do? We simply wait, because it's diagram B, right? So we wait. And where do we wait? We wait for pullbacks, inducement first. And to identify inducement, understand your pullbacks. So this is our valid pullback. We have the low of the candle, we have the high, price trades above it, price trades below it, and what happened? Price comes inducement, right? So this was the candle that caused the inducement. And remember, we already have one inducement here, so second inducement here, and this becomes our order flow. So we can enter from our demand or supply zone in this scenario. Remember, this is diagram B. Go check the chart and you understand what I mean. Okay, so this is exactly what happened. All right, so let's say you missed this, or you took this trade. Of course, you should have taken a lot of profit already, from, because you see price came to this key level. So what do we do in order for us to identify another zone, break of structure, and of course which zone was responsible for that? All this zone was actually responsible for that. This zone was responsible for this, all the push-ups here, all of this push was that high that was responsible for it. However, there's another thing we must pay attention. Internally, we have this and we have this. Okay, so what do we see? Price trades above it, push down. This one did not trade below it, however trade above it, kind of in this internal structure actually. So there's a whole lot to learn about internal structure as well. And we have a break of structure here. Then we could now use, that's only when we can now use this as our inducement. And of course, that if we decide to use that, based on what I just explained, this becomes a sweep. And what do we do after the sweep? We simply wait for break. Okay, so potentially if we check here, we see 1, 2. Okay, so this of course is a valid break, and in this case this is an order flow. And all right, this is an order flow, and however the stop loss is a little bit large, so for me I will have to check the lower time frame for confirmation. However, it doesn't stop the fact that price still went to hit our take profit. We should be here. You understand? So basically, in case you don't understand this, watch it over and over again. You are going to get it. If you were blessed, check feel free, let me know in the video description. Check below to join the VIP signals, to join one-on-one private mentorship. You can book a session with me, and I'm going to teach you all the secret that you need. All right, especially the trend, because all of this becomes useless when you don't understand the trend. Okay, and how do we do that? That's where my KDRC comes in. Okay, so as you can see, this, for example, these vertical lines are my KDRC stamps. Okay, I use this day in and day out every single time. Okay, and believe me, they are going to change the way you look at the chart forever.